Hello, how do I find stocks that pay dividend? We are going to search dividend stocks in the consumer discretionary sector in the following industries: diversified consumer services, and hotel, restaurant, and leisure. So, first you log into your Charles Schwab account. We are going to find dividend stock using Charles Schwab account. So if you have Charles Schwab account, you tap in Charles Schwab account in your browser, internet browser, and you put your login information and login. If you want to create an account with Charles Schwab, you can click on open an account to create an account with them. So once you log into your Charles Schwab account, you by default will be under account and under summary. You will click in the top bar, you click on research and you click on US market. We want to find dividend stocks, so we are going to research those stocks. And when you are on the US market page, you click on classic view if you have that option. And under classic view, you'll have the list of sectors. You scroll down to find the sectors. You click on industry, so we are still under US market. You click on industries. And you'll be able to find the sectors. And today we are going to continue with consumer discretionary. So we are going to click on that, but if there is another sector you are interested in, you click on that sector. So in this video, we are going to click on consumer discretionary. And under consumer discretionary, you'll find the industries that are in that sector. And we are going to work on diversified consumer service. Let me see if I can make it a little bit. So we are going to work on diversified consumer services and hotel, restaurants, and leisure if we have time. So we are going to click on the sector, and the industry is going to take us to the sub-industries under that industry. And you can see the path as well on top. So you scroll down, and under diversified consumer services industry, we have two sub-industries: education services and specialized consumer services. So we are going to click on the first sub-industry, education services. When you click on the sub-industry, you are going to find the companies that are classified under that sub-industry. And you can see the path as well. And you scroll down, and you'll be able to find the industries. But because we are looking for dividend stock, we are not going to go with the performance data, but we are going to go with valuations. And when you click on each one of those, you'll be able to find how they are, the information related to those companies. But we are going to click on valuations because valuation includes dividend yield or annual dividend rate, and that's because we are looking for dividend stocks. That's where we'll go. And a lot of time is now organized the way we want. So you click on dividend yield, and it will organize it from the highest dividend to the lowest. So I think by default it's organized by lowest rate to the highest rate. So when you click on it, it will reorganize it from the highest dividend rate to the lowest one. So let's set some parameters here to work with. You want to find dividend stocks that you can invest in. So we have our criteria here that we want to use so that we stay focused. And that is, first you will sort your stock by dividend, and we just did that. You want to eliminate LLC, partnership companies. So things that will end with LLC, partners, LP, LTD, you want to eliminate those from the list, and you want to eliminate international companies like that will end with SA. The company's name that will end with SA as well. So, and you will set some dividend rates, and within that you eliminate the one that are international companies and the one that are LLC companies, and you record the corporations in your investment spreadsheet. So let's see if we have another criteria here that we want to. I think I came across it a little bit here. You want to set a dividend yield to work with. And again, it depends on your goal, what you are trying to reach. Okay, so at this stage, you can set the annual dividend rate, the minimum that you want to accept. And you may not know all the factors yet, but we are going to set 3% and not less than that in this video. But again, you can choose the one that works for you. So 3% and no more than that. And we have one company here that made a car. May close it. So when it does that, you can just close it. So at this stage, we have one company in this sub-industry that pay 3%. You will copy the name, you write the name in your investment stock spreadsheet, the stock price, and the symbol. So it is for your how to create a spreadsheet to record your dividend stocks that you want to invest in. You just open, you can use Google Sheet, you can use a spreadsheet. I'm using a spreadsheet. You'll have a column for the company's name, a column for the symbol, have a column for the market the stock is sold on, have a column for the price, have a column for the dividend, and by dividend rate, I'm talking about the annual dividend. If you want the dollar amount, dividend-wise, you can have a column for it as well. You'll have a column for 52 weeks, low, and 52 weeks high. Let me see here. I think I have it in this section. And that is the price. How the lowest price is reached within 52 weeks and the highest price is reached within 52 weeks. So you will have columns for those. You are going to use those criteria to find the one you are going to invest in. So you fill out the columns over time. So it's good to have a column for the sector, a column for the industry, a column for the sub-industry, and it's good to have a column for the year it went public. You can have a column for a beta as well. I don't use beta often, but I do use it times to times. So, and the reason why it's good to have the sector, industry, and sub-industry, so that when you are investing in those stocks, you can look at the stocks you invest in to see how diversified you are. If you have a variety of industries in your portfolio, so it might be good to track that from the beginning. So, and then you copy those information that I just printed out, the company's name, the company symbol, the price it's selling now, and the dividend rate, the annual dividend rate. Those are the 4 information that you can find right from this search page. 1, 2, the price, that's the price, the current price, and then the dividend yield. No, sorry, it's not the price here. The price is right underneath the company's name. So I'm going to say that again. So you have the symbol, you have the company's name, you have the price it last sold before the market closed, depending on when you are doing it. But the price it last sold, you'll have it right underneath the company's name, and then you'll have the dividend rates. So you copy those information from this, and that's pretty much what we need from this page. And since we only have one company, that's all we will have a record of. And sometimes you may have more than one pages. It's good to go to the other pages as well to make sure your dividend rates sort out well. And here I have a company here that has 41.72% dividend rate, but it didn't make it through to the top of the other page. I'm not sure why. Let me click on dividend yield here again on this page too. So it's not going to change that. Okay, so I'm not sure why that one didn't make it through to the first page. But sometimes it's good if you have more than multiple pages for the search result to go to the other pages to see what you have out there. And I'm not sure why this one didn't make it through that page, but it might be a good idea to take note of that. And maybe you might eliminate it later. It may not pass other criteria of yours. We don't know. And I can just search. We are under education. Let me see again. Education service. Let me see if I have that on my spreadsheet. Okay. I have consumer discretionary. And keep in mind that even those sector industries, they change. So I think I have a spot here, and we can just include that company that didn't make it to here. Let's see if I can copy it. And you'll notice that it has group. I will assume it's a corporation. Shouldn't have done that. Okay. And then you will enter the symbol, so SCG, and then the price is $3.26. $3.26. Sometimes I like to add the dates that I did the research so that, but it does not really matter. So the dividend yield was 41.72%, I believe. And then we can copy the sector, industry, and sub-industry, but let's make sure we have the sub-industry rights. Education services. I don't know why I searched it earlier. It didn't bring me right there. So we enter that in our information, and it gives you an idea how you enter those information in your investment spreadsheet. Now you can go to the page 3, and we will scroll down to see if there is any more. We don't have any. So now that we exhaust the list of education services, you will go back up and you will click on Diversified Consumer Service Industry so that you can see the other sub-industries in that category. So we are going to click on Specialized Consumer Services. And under Specialized Consumer Services, we will find the companies that are in the sub-industries. So now that we scroll down to the companies, those are the companies classified under Specialized Consumer Services sub-industry. We are going to click on Valuation so that we can see the dividend rates. So we are going to click on the dividend yield so that we can sort it from the highest to the lowest. And here we have one that made it throughout 3% plus rates, and that's HR Block. So we are going to see if we have HR Block in our spreadsheet or we will add it. And here we have HR Block. And depending on when I did this search, the price will change, and probably the dividend yield as well. And you don't have to keep making changes, or if you make one, it will be the dividend yield, but not necessarily the price, because the price is going to change. It changes right often, even daily. And this is not the price. The price is underneath. The company's name is $31.75 now, and the dividend yield is 3.65%. And usually I do not change the dividend yield from my investment spreadsheets because that's something that can change as well. And it's for reference purposes, but I'm aware that it can change. Okay, so now that we have one that made a car, we will get out of here. If you choose 2%, okay, then you will see anything else that made the car. But there is something here that I didn't point out because you only have one option, is you want to read the company's name and eliminate any LLC or international company. And as I'm scrolling down, I can see if I have any of that. You see this one that says LTD. It does not have dividend yield. But if it did have dividend yield, a higher one, but it has LTD at the end, I would recommend you eliminate it. Even though it has a high dividend yield, it is a partnership, you will eliminate it. But in this example, it does not even have dividend yield. So you want things that will say INC, that's incorporated, CO, that means corporation, or corporation, or corp, that means corporation as well. Those are what you are after if they pay dividend. So you can see CO here, you can see INC, you can see corp. Those are corporations. LTD is limited liability companies, and you do not want that. And that's just one page. So we are going to move out of here. And the reason why I'm eliminating partnership from the list is because you are going to file additional, you are going to file Schedule K1 with your 1040 if you have LLC in your investment portfolio, and if it is in your Roth IRA, you will send that Schedule K when you receive it from the company to your brokerage firm, which will be Charles Schwab in this example, and they will file a tax return for your Roth IRA, which is a tax-free retirement account, but they will file a tax return for it because of that LLC stock that you have in it. So now that we exhaust this list, we'll go back to Diversified Consumer Services to make sure we went through all the sub-industries, and we did. Now we'll go back to the consumer discretionary to the next, if we want, we can do that to go to the next sector. So I will suggest the next industry. I will suggest you batch research. So you can go through one sector and gather dividend stock from all the, and go through all the industries in that sector and gather the dividend stocks you're interested in from all the sub-industries within those industries and within that sector before you move to the next step. Or you can just choose one industry in a sector and gather the dividend stock in all the sub-industries within that industry, and then you move to the next step. In this, we are going to batch research 2 industries and gather dividend stock from all sub-industries within those 2 industries. So we are done with Diversified Consumer Services, and we are going to analyze hotel, restaurants, and leisure industry. It has 4 sub-industries. The first one is casino and gaming. So you click on that. And you'll find the companies within that sub-industry. You'll click on valuation, and you'll click on dividend yield to sort it by dividend rate from the highest to the lowest, and we want 3% minimum. Therefore, we will stop on the first 2, and now we are going to see the company's name to see how it ended. So we have INC, which is what we are looking for, American company, and this is BHD, and we don't know what that is, but clearly it is an international company, so we are not going to include it, even though it has a high dividend yield. So we are going to go with the first one. The first one is Four Corners INC. So you'll put the company's name in your spreadsheet, the price $2.09, the company, the stock symbol, and the dividend yield. You'll add those information in your spreadsheet, and we are going to scroll down to see if we have more pages. We do have the second page as well. and we do not have any high dividend rate here. And AJ is an international company entity classification as well, and that's something to eliminate. So those are examples of international company. You can see AJ, you can see SA, and we saw BHD as well. I don't know what the BHD stands for. Usually French companies will have SA, but I don't know if they are the only one that use that. But and the reason why I'm eliminating international companies is because I don't know the entity classification, if there is additional tax form that I had to include in my tax return because of that. So that's why I tend to be cautious when I'm investing in international companies. That's just the reason. So now that we found one in this sector, we will go back to the sub-industry and we'll click on hotel, resort, and cruise lines sub-industry to see the companies that they have out there. We'll click on valuation and we'll click on dividend yield to sort it from the highest to the lowest, and we have one that is 4.16%, and that's the only one, and it's Travel Plus Leisure Co. That means company. So you'll put that in your spreadsheets. You'll put, I'm not sure why this is here with 0%. I believe we saw it. Okay, but anyway, the price is $40.90, and the symbol is CNL, and the dividend yield is 4.16%. So you can scroll down to see if you have more pages to go through, and there is page 2. You can scroll to see if there is a high dividend that's similar to page 1. So there is none. We are looking for dividend stock. It does not mean that the other companies that are not paying dividend are bad companies. Far from it. But in this video, we are searching dividend stocks to invest in. So if you are trying to invest in dividend stocks, then you want to find companies that pay dividend. So you might want to set your goals. You might want to set your goals so that you do not lose focus on what you are trying to achieve. And when you are looking for companies that are great companies but do not pay dividend, there is a way to search those as well. And it's not what this video is about. So we found the one that passed our filter, our dividend filter and company entity filter in this sub-industry. So we'll go back to the industry category again, and we'll move to the next one, and the next one is leisure facilities. And under that sub-industry, we'll find the companies that are included. And we'll click on valuation so that we can find the dividend yield column, and we'll click on that to sort it from the highest to the lowest dividend. And we have Vail Resort Inc., current price $239.66, symbol MTN, dividend yield 3.44%, annual dividend rate. You can add it to your spreadsheets if you set minimum dividend rate as 3%. As you can see, we found a lot, 3%, 2%, but very few in this industry that pay 5, 6, 7, 8%. So that's something to keep in mind. Some industry category you may not find a lot of high paying dividend. So we can scroll down, there is none. So we go back to the industries and we'll go through the last one, and it is restaurants. It has 57 companies. And we have the companies. We are going to click on valuation, and we are going to click on dividend yield, and we set 3%. So we are going to scroll, and we are going to stop here. We are going to stop here. So now that we select high paying dividend up to 3%, we are going to screen them by eliminating international companies that use anything other than corporation in the title and LLC partnership company. So this one is INC Medica, INC Medica, INC Medica, Corp Medica, CO Medica, INC Medica, INC Medica, and this one is INC. So we have 1, 2, 3, 4, 5, 6, 7, 8 that Medica. And we have 299, 298. If you think they are close to 3%, you want to include them, it's up to you. 293, if you want to include them, then you can see how the company's name are. They are all INC, so they all will Medica. And you report them on your investment spreadsheet. And I believe now we exhaust our list. For the two industries. So we search the companies, the companies that pay dividend up to 3% and up within all the sub-industries within those two industries. So now that we have gone through those two industries and retrieve high-paying dividends, we are going to put them through other filters to see the one that we like. So I'm going to go back to our PowerPoint here to see if I save them. So the first one in the education service, we have strategy, educational, and INC. So if you are working from your spreadsheet, you have the list of companies that you selected. Let me I'm going to leave it like that for now. But anyway, you have the list of companies that you entered in your spreadsheet. Now you want to search those companies to see if they are really good companies for you to invest in them long term. So to do that, you'll go to research and you'll click on research tools. I mean, technically you can start searching here as well, but we are just going to, if you did those things different time, not all the same day, you log out, log in. Just want to show you where you go. So when you log in, you go to research tools, and you just make sure you're under stocks, and you just start typing the symbol. I usually tap the symbol, not the name, but the symbol in the search bar. So I'm going to get out of this, and I'm going to use the PowerPoint to find. So we have STRA. So we'll put that one STRA, and it will pull the company's name. You click on it and it'll open it. So on this page you will pull some information and record them on your investment spreadsheet. The market the company stocks is sold on. You are looking for NASDAQ or New York Stock Exchange. Anything other than that, you eliminate that stocks. You can see OTC, that's over the counter. You eliminate that stocks. That means it didn't meet your requirement. So that's another filter to put your stocks through. So that's why we have a column for the markets they are sold on. So now that this one passed that, you move to the next. If this one was OTC, OCT for instance, over the counter, you just move out of this and search the next stocks. It didn't pass that market filter of yours. You just move to the next. You don't even continue with it. But since it passed that filter, while we are here, you can the classic view will have a different look. This is the modern view for Charles Schwab platform. So you'll find the 52 weeks range. That's the low and that's the highest. So that means at some point within the 52 weeks, it was sold at $98.22, and at some point it was sold for $59.43. So you want to put those two numbers on your spreadsheet as well. That's why we have 52 weeks, low and high column, so that they can be added there. And it just comes into play when you are ready to purchase something. You want to place an order when the price it is selling, which is here $76.11, is close to the 52 weeks low than it is to 52 weeks high. So you want to buy it low. And at this point, it's getting close to the middle, but it's still close to the low. But at this point, I won't advise, if you have the money to invest in, like this company to invest in it, it's a little bit close to high. It's better you keep an eye on it, and when it goes down a little bit, you buy it. And those 52 weeks range, low and high, they varies as well over time. So now that you have those information on your spreadsheet, you scroll down. And at this point, I like to batch work as well. There is a chart, and I like to see what I can find on this page, and then I will search the next and so forth. And then later I will come back again and do the chart, and just do the chart all by themselves. And let's see if we want to do it that way, instead of going through the chart for each one of them. Let's see if we can batch work that way. So now that we are here, you can scroll down to check the dividend yield to make sure there is different way to evaluate stocks. I just narrow mine to few factors: dividend and the chart. After it pass, other filters of mine that we already screened them through. So the dividend yield is 3.15%. I like to use the percentage, but you can use the dollar amount as well, because the dollar amount is kind of relative. Depending on the price the stock is selling, the rate will be different. I like to just use rates. But if you want to use the dollar amount, you can. So you pay quarterly, and at some point in your investment, when you pay will matter, but not at the beginning. Once you have enough stock in your portfolio, and you notice that the 3 months you get dividend 3 months of a quarter, that means every month you get dividend payment. Then if a month they pay you less, you get less dividend income. Then when you are investing more in stocks, you wanted to invest in companies that pay dividend in that particular month. I don't know if it makes sense. So that's when maybe we might talk about it again during the video toward the end. But yeah, so 3.15. Okay, so now that we found those information and we have them on our spreadsheet, we will move to the next company. To again, we are batch searching, and I believe for this one we only have one. So let's see if the next industry, that will be specialized consumer services, we have one there as well, and that's HR block. So HRB. So we'll go back and we'll search HRB and we'll click on it. And right now HR block is close to low than it is to the high. So if you want to invest in it after it passes all your screen, I think that would be the right time to buy some of it. So even if you have $100 to invest, you can see that there are stocks that sell for less than $100. So you can buy 2 shares of HR block for less than $100, for instance. Does that make sense? So at some point it sold for $28.83, and at some point it sold for $48.76. So because it's HR block, if you don't know what HR block is, they file taxes. So that means during tax season, the first 3 months of the year, or I would say maybe February, March, April, May, if I don't include January, but the price might be higher when it is tax season, pretty much, and when it's not tax season, the price might go down. So that's something to, but usually I don't try to know the company's cyclical. I don't know if I'm saying it well, but cycle to invest in it. But if I know the company already, then I will try to think about those things. So, but anyway, so we have, at this point, there is a factor here that we are putting them through. That's the market they are sold on, and it's sold on the New York Stock Exchange. So it passed that filter. You will write it on your spreadsheet, and you already have the price already from the search. So you don't need to write the price down again. If the price change, that's okay too. It's going to change daily anyway. So, but at this point, you will write the 52 weeks low and 52 weeks high on your spreadsheet for reference purposes later as well. So, and then you can go down and double check the dividend yield for confirmation. So dividend yield is 3.65, and I mean, if you want, you can add another column to your spreadsheets to add the month that they pay dividend. You just need to add the payday. It varies per quarter, but when you need that information, you already have it on your spreadsheet. You don't need to search it. So if it's paying in July, that means it's technically paying you the first month of the quarter. Let's see, January, February, March, that's quarter 1. April, May, June, that's quarter 2. July is the first month of quarter 3. So that means pretty much it pay you month 1 of each quarter, because it's called dividend and it's paying you in July. So you can just put month 1 on your spreadsheet. I didn't do it on my things, but as I'm pulling some stock from that list to have on hand and target first, I'm taking that into consideration. So I'm putting, month 1, month 3, and things like that next to it for reference purposes. So that if, and those are just the quarter. So if a dividend, I think I should have that on. I should have that on here. Let me see if I can find it. Probably not that one. So if you notice that some month you get less dividend, then you will see companies that pay you within the amount to see when you have money to invest. You want to see which one of them are on the low side. Their current prices are closer to 52 weeks low to invest more in those, so that over time that amount dividend income is high, increases. Does that make sense? So you can set goals like that to increase your monthly dividend income. So once the first 3 months of the 3 months in a quarter you earn some dividend income, that means every month of the year you'll earn some sort of dividend income, even if that's low. That's something. So, and you can, for that reason, if for later down the road to intentionally invest in certain companies to increase how much dividend income you are earning in particular month of the quarter, it might be a good idea from the start, when you scroll down, to double check the dividend rate, to just put down if that's month 1 or month 2 or month 3 of a quarter that it pays dividend, and this one pay in month 1. So that means in January they will have pay dividend, and they will pay dividend in January. Let me see, January, February, March. They will pay dividend in January, April, and July, and then July, August, September, October, November, December. So then they will pay in October. Okay, so the first month of a quarter. Okay, so now that we got that one down, let's go back to our list again. And we exhaust that first industry. So now we will go to the hotel, restaurant, and leisure industry. So we have casino and gaming. Under casino and gaming, we found one, Four Corners Inc. So FCNE. So we'll enter FCNE, Four Corners Inc. And Four Corners Inc., you can see is selling for first OTC. OTC is selling over the counter. Therefore, we are going to eliminate it. It doesn't pass that requirement. And if it's on your spreadsheet, you can just leave it on the spreadsheet. Let me see. I don't even know if I have it on the spreadsheet. I do not. Okay. So, if you have it, if you have it on your spreadsheet, you can just leave it and you move on to the next. So it didn't pass that criteria of selling on NASDAQ or New York Stock Exchange. Therefore, we are not going to do anything. We will move to the next one. So the next one is done in this, I believe there is one that was 41.72, and that was STG. So STG is selling on New York Exchange. It does have this ADR. I will say that's an international company. But anyway, so it's selling for $3.26. That's the current price, and it's close to the 52 weeks low than it is to the 52 weeks high. So $2.97. So we are going to go here. We are going to 2.97, and we have 15.30, 15.40, 15.40 for 52 weeks low and high, and it's selling for $3.26 now. So that's quite low, and we can scroll down to see the dividend yield, and the dividend yield is 41%, but it does not have a lot of information here to work with. So we'll come to that later as we continue with the chart. It could be a new company, we don't know. So we will put it through more filters. For now, it passed our filter so far. So you continue. We have hotel, resort, cruise line, sub-industries here, and we found one, and that is travel and leisure company. So TNL. We will click on it. In fact, this one should tell us, I got it over, but it should tell us if it's an international company. Usually you'll find it at the beginning somewhere, but anyway. So TNL is selling on New York Stock Exchange. So it passed that filter. Therefore, you will put that on your spreadsheet, and then you'll put the 52 weeks low and the 52 weeks high on your spreadsheet. Right now it's kind of mid between those. It's not the right time to buy it, but let's go check the dividend. And the dividend 4.16%, and it pay in month 3 of the quarter. You can put that on your spreadsheet, and this one we are done with it. So let's go back and see which one is next. We have leisure facilities, and we have Vail Resort INC, that Medica MTN. So we will click on it, and it's even closer to the highest, but let's check the market is sold on, and that's New York Stock Exchange. It passed that filter, so you add the market to your spreadsheet, and you will add the 52 weeks low 201.91 and the 52 weeks high 269.50 on your spreadsheet, and then you scroll down to check the dividend to confirm that's what you have in your record. 3.44, and January, February, March, April, it pay in May, it pay in month 1 of the quarter, so it pay in April. But here's the things though, if it's quarterly, it pay in April, May, June, okay, So the next will be July. Okay, so it pay in April, month 1, and we just go up. That's the only one in this. We will go to the next one, and that's restaurant sub-industries. And restaurant sub-industries, okay, so we have the first one is FAT, Fat Brand INC, and I think they are all INC, so, and they are all corporations. So let's start with FAT. That's the restaurants that we have more that pay high dividends. So we are going to search them. So FAT is on NASDAQ, so it passed the filter. Therefore, you take the time to write the 52 weeks low and the 52 weeks high. So it's sold from $4.73 to $10 within the current 52 week, the previous 52 weeks, or the 52 weeks range. And right now is at $6.75, closer to the low than the high. Anyway, so let's go to the dividend here. 8.3%, and pay dividend in month 3. Yeah, of the quarter. So let's go up, and as you can see, even with $100 you can invest in multiple share of a stock if the stock is a good one that you're interested in. Some of them are higher price, some of them are low price. So, and in case you don't know, Charles Schwab does not charge you to buy or sell a stock. They used to, but not anymore. But I think there are some stock that they will charge you for. I don't know if that's OCT, over the counter one, or I don't know, but most of them, usually they do not charge you to buy or sell stocks. So even if you have $50 to invest, you put it in your account. When you are ready to invest, you find a stock that is on the low and pass all your criteria and is on the low side, price wise, you buy some. Okay, so now let's move to the next one, is CBRL. Cracker Barrel. All Country Store INC. It's selling for $91.19 and it's selling on NASDAQ. So it passed the market filter, and you record the 52 weeks low and high is from 81 to 121. It's close to low than it is to the high, and the annual dividend yield is 5.7%, and the next payday is August. That will be month 2 of a quarter. So the next one is BABB. 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 Let me double check the name here. Yeah, Babe. So BABB is selling on OTC. So we are going to eliminate it. We are not even going to continue with that. The next one is WEN for Wendy's. And that's a fast food restaurant. WEN, Wendy's. And is on the high right now. It's not the right time to buy if that's a good company. We have not put them all through all our filters yet. but it's selling on NASDAQ, so it passed that filter. Therefore, you can write the 52 weeks range 1703 and the 52 weeks high 23.90. At this point, it's $22.22, so it's close to highest price on the 52 weeks range. The dividend 4.5%, and it pay in month 3 of the quarter, and 25 cents a share in dividend. So every dividend pay is 25 cents a share. A year it pay $1, since they'll pay 4 times a year. So we'll move to the next one, and that will be ARKR. Ark Restaurant Corp. It's selling on NASDAQ, so it passed that filter. It's selling for $18.34, and the 52 weeks low was $15.50, and the 52 weeks high is $22.45. $3 is selling more now, $3 more than the 52 weeks low, and probably $4 behind its 52 weeks high. So pretty much what you'll try to do is, you can see the difference between the 52 weeks low and the current price, and you can see the difference between the 52 weeks high and the current price. So the two differences, you compare them. So which one is higher? That's where you know that it's leaning, the current price is leaning toward the highest 52 weeks or the lowest 52 weeks. So, and the current model platform tend to have this line here to show you, to make it easy. But if you are using the classic view, you won't have that. So you can do 18.3354 minus 15.50. So it's $2.84 away from 52 weeks low. So you can do 52.45 minus 18.3354 is 411. So it is closer, the current price is closer to 52 weeks low than it is to 52 weeks high. Does that make sense? So you are pretty much comparing this $4.11 to that $2.84 that we found before when we did that 15.50 minus 18.34. Okay. So you scroll down and you find the dividend to see what you record is accurate, is 409, and month 3 of the quarter it paid dividend. And you can see that it's paying you 19 cents, because those dollar amount can be different depending on the price. That's why I like to use the rate, the dividend rate, so that it can be easy for me to compare multiple stocks at the same time. So now let's move to the next one. It will be Blooming Brand, BLMN. BLMN. MN. And it is close to the 52 weeks high. It's selling on NASDAQ, so you are going to pass that filter. So it's good to write the 52 weeks low and 52 weeks high on your spreadsheet. You can scroll down and double check the dividend and the month they pay. They pay January, February, March, April, May in month 2 of the quarter, and they pay 3.75% annual dividend rate. The next one is Dine Brand Global Inc. So we are going to go with DIN. and it's selling on a New York Stock Exchange. So it passed that filter. Therefore, it's good to write the 52 weeks low and 52 weeks high on your spreadsheet. If you have 3% dividend mark on your spreadsheet to accept those, you can add it. And it's close to the 52 weeks low than it is to 52 weeks high. It's selling at 61.78. So, and the 52 weeks low is 59 and the 52 weeks high is 82. So it's closer to 52 weeks low. The dividend yield is 3.3% and it pay in month 1 of a quarter, and it paid about 51 cents a share every quarter. The next one is Cheesecake Factory, Inc. Cake. It's selling on NASDAQ. It passed that requirement. Therefore, you move to the next. You record the 52 weeks low and the 52 weeks high. So 26.05 and 41.28. Right now, it's selling for 32.83. So that means it's getting closer to the highest. But to be sure, we can do the calculation. So 32.83 minus 26.05 is 6.78. 41.28 minus 32.33. No, I didn't do it well. Okay, so 41.28 minus 32.83. Oh, come on. Okay, let's do it again. 41.28 minus 32.83, $8.45. So $8.45. $8.45 compared to $6.78. So it is closer to 52 weeks low than it is to 52 weeks high. So if you have money to invest, and after putting this company through all your filters, it pass, and you have money to invest and you want to invest in it, I think it is the right time to invest. It's still closer to 52 weeks low than it is to 52 weeks high. But if you have multiple companies that made the car and you are trying to figure out which one to invest in, and the differential factor is the price compared to the 52 weeks low, you might find that others are closer to the 52 weeks low in this research than this one. So you might have to go with another one, or just buy one share of all of them that made the car, to just have them in the portfolio so that you can go from there. It's one way too. So I think we search all of them in this batch. So now we are going to move to the next filter. So let's go to, let's check our criteria here. Now that let's go to our spreadsheet first. So by now, whatever stocks you found based on this research, you have the company, you have the symbol, you have the market is selling on, you have the price, you have the dividend yield, and you have the 52 weeks low, the 52 weeks high, you have the sector, the industry, the sub-industries. But you do not have everything yet. You still have the chart trend and the year it went public. Those are two other filters that we are going to put them through. And the 52 weeks low and 52 weeks high and the price will be the final filters to actually make a purchase. So like if that's the right time to buy or not, type things. Those are the three element that you are going to use to decide that. But we are going to put those stocks that made the cut through other sets. The trend, that will be the chart, and then the year it went public. So it's good to set a parameter to work with. And I have set multiple. So time to time you can lower your filters or you can tighten it up. I have one here. So annual dividend rate, that is 5% plus, upward trend, and went public before 2000. I want to find those companies, invest in them, and then loosen up the filters again and add more to it. So we have another parameters here. Let me see. Stock from companies in business before 1999 paying 6% and plus annual dividend rate, and chart show growth and dip. So if the chart is going to show growth and dip, I want the company to be in business before 1999, and I want that to be paying at least 6% dividend. And then I have another parameters. Stock from companies in business before 1990 paying 3% and up, annual dividend, chart show upward growth. So you can do any combinations that work for you to filter the list of the stocks that you have on your spreadsheet, to narrow them down to some, invest in those, and then analyze them again and pull others from the list and invest in them, choosing the best one first based on a parameter, and then choose the best one next based on another parameters. And those parameters may now work in synchrony between themselves. So because one I say upward growth, another one I say growth and dip. So they mean different things in my opinion. So let's go to the list of criteria that we are sifting or screening those stocks with. So we saw company stocks by dividend. We did that. We eliminate LLC and partners companies. We avoid international companies that are using other entity denomination that we don't have a knowledge of. And we batch research those dividend stocks, and then we went and searched those companies one by one to find the market they are selling on, and we eliminate the OTC market stocks. Now we are going to pull them through the next two criteria: the year they went public and the chart trend. So we are going to batch research those or analyze those. And before we do it, let's go back and see some example of chart trend here. So it's good to set a criteria. I set a criteria for upward growth, and I have example of upward growth. We have upward growth examples here, and upward growth, I want the company to be public, to go public before 2000, and by preference 6% up dividend yield. 5% is good, 3%, 4% good, 3%, 2% if that's a great company. So for that, it's good to, if you know some companies that have great chart, you can go through those charts to have them, to have your brain soak that path. And I'm showing linear path, like, because it has the year at the bottom on the axis line, and it has the price that the company stock sold for during the sold for on the Y vertical line. and you want to see a growth. So it has to be linear. It has to be from low to high. So when it's high, that means the price is high. And when it's further from zero, that means as year passes. Does that make sense? So this is a good growth chart. And this is a chart for Home Depot company. And let's make this big for us to see. And I'm going to move to another. Let me go back. I should have. Okay, I see why he's doing that. I set criteria. So for the growth and dip chart, we want the company to go public before 2000. And annual dividend, we want 6% plus 5, 4, but not lower than that. But it's up to you. You might find good company and you might accept it. It's up to you. But that's an example of growth and dip chart. And what I meant by that is it'll go up, down, up, down. You can see those big jump over the years. The big jump, I like to call it growth and dip. So that means if you invest in that, when the market is down, or if they dip down when the market is down, it may not be the right time to sell. But if there is a growth to it, that means either way it could have been the price, even though they'll be in dip, the price that they are selling at that point will be higher than what you pay for, if that makes sense. If you want to compare this dip, I'm saying dip in relation to this chart here. This is a dip, but this is a growth if you are comparing it to the beginning. So if you bought it at some point here and you have this dip here compared to this growth, this dip is still higher, still make you profit. If you sell it at this dip, you still make profit if you have bought it around this time frame. Does that make sense? Okay. So you still want to see a growth pattern in the chart trend, even if it's showing you big jump up, big jump down, if it makes sense. Okay, so example of upward chart. So we have this one. I think I might just have to go back to the other because I have some notes and I can show the notes. So this one is Clorus chart, and that's upward chart. And this one is caterpillar. And you can see those jump in it as well, but you can see a steady growth to it. The jump is not that quite obvious like the other one. Oh, and by the way, when we are doing the chart, that's where you'll find the year it went public, because you'll be finding it at the beginning. You'll be finding it. You'll find it at the beginning of the chart, because the bottom, the axis has the year. You'll find it at the bottom, and you want the first year date that they have. Okay, so this is Cat, and this is Colgate company. So that's an upward growth. You can see that they all have this different type of growth, even though they are all, I'm calling them all upward growth. The chart is different for each one of them. So it's good to soak your mind with that trend, because what I have noticed is sometimes I'll call something growth and dip, or sometimes I'll call a chart upward, and later on when I check it again, I'll say this is a growth and dip. Then I'll check my expression and I'll say, oh, I put upward there. So when you are analyzing some stock and you see a lot of growth and dip, when you see something that is a little bit different, you'll call it upward. But sometimes when you see a lot of upward chart and you see that one, you will see that's growth and dip. So it can be, your view on the chart trend can be different depending on how the trend is. Some are obvious, some you might you just have to find a way to name the chart when you see them. So this is Colgate's company, and this I'll call it upward trend. It has a growth to it, and just by comparing when they start, how much they are selling to now how much they are selling. So they were selling for around $2, and now $75. So you can see the difference. So you want that growth. Even though we are investing in dividend stocks, we are investing in those stocks from day one. We want them to be paying us a dividend on those investment, but at the same time we want those companies that show growth in their stock price, so that our money invests a build equity, increase in value. So that's why we want we want to see those growth in those on those chart. So that's Colgate. This one is Johnson & Johnson, and I'll call this upward growth as well. This one is Inbridge, INC, and I'm calling this upward by reference to the beginning all the way to now. I can see growth there, even though the last few decades there is those up and down. I'm calling this upward growth, but again, you might call it down growth and dip. So it can be subjective. So, and this one is General Mills, and that's upward growth. There are some charts that I really like to see, and General Mills is a good one, but more importantly, Johnson & Johnson is the best one. And I think Home Depot, this is Clorox. Clorox is a good one as well. So you can just and yeah, Home Depot is a good one. So you can just soak some images of those growth to compare the stock you are searching, their chart to those chart, if that makes sense. So this one is General Mills. The next one is Coke, and I say growth, upward growth as well. But you can see, I will say upward growth in relation to the beginning and the end. I will say upward growth. And the next one is Home Depot. We have it at the beginning. So now let's see some example of growth and dip chart. So we have Verizon. So you can see the big jump, the big dip, and even the dip is now down like the way the jump was. But then we see those. So in relation to the beginning, you can see that there is still growth to it. So growth and dip. If the end is low, like close to when they went public, I would say downward trend. So you do not want that. At any point in the future that you want to sell your stock, you want to sell it at a price that is higher than what you pay for it. So you want to buy it when it's on low. So, but you have to be mindful of the company you are buying. If that has that growth and dip, you want it to make sure you are buying it when it's on the low side, so that you do not buy it when it's on the up the ceiling of that time frame. So the next one, let's see if we have a few more. And this one is Pfizer. I will say growth and dip because it has this growth, it has this dip, and then we start another growth in 2000 after 2020, but then it went down. So I will say growth and dip, but there is still growth in it. You can say upward, but I will say that's growth and dip because of this big jump that makes the dip quite obvious. I like to say growth and dip. And this one is Ford. And Ford is growth and deep. And it's quite dangerous actually. There is a risk that you can actually come across the price that is sold for at the beginning somewhere down here as well. So it's quite frightening, but that's something to be aware of, that it can have a big jump and it can have a big dip as well. So that's a growth and a dip, but still is selling at a price that is higher than the price it started with. So that's good. So there is a growth and dip. It's like if that's cyclical, seasonal type things, cyclical. But anyway, you know what I'm talking about. So there is seasonal things going on here, and that's pretty much it. So now that we soak our mind with those, let's go search our company. So we can just start with the last one, since we have that Cheesecake Factory here. So to analyze the chart, you'll see the chart already on the page. You just click to extend the chart. So if you are on the classic view, on that chart you will see max. You will click on max and it will be able to take you to the same one. So now that we are on this page, we are going to batch search the chart here as well. So for the Cheesecake Factory, you want to make sure you have max selected. Otherwise, you need to click on the drop down menu to select maximum chart. And when you are under maximum chart, you want to see when it went public. That's pretty much is going to be the first date, or you can go to the beginning of the chart to say it's 1992. So 1992, you'll put that on your spreadsheet. And let's first analyze this. So this, I will say, that's growth and dip. That's when it sold $3.13 in 1992. Now it's selling for $32. So you can see that if somebody bought it in 1992 for $3 something, in 2022 it's selling for $32.83. That $3 invested will have gone up to $32. So pretty much $29 ish, or $28 appreciation of that $3 invested in 1992, and now in 2023. Does that make sense? So we want our money to appreciate in value, but at the same time, within that time frame, we want the company to be paying us dividend. It's like, yes, I know that some investors will prefer to invest in companies that show growth but does not pay dividend, or do not pay dividend. Those companies do not pay dividend, and stock companies might have that. And sometimes those companies that do not pay dividend might show growth quite a bit in their prices over time. But you invest in those companies with the assumption that in decades later, when you sell it, you'll make a lot of money out of it. And that's great. And that's one way to invest in the stock market too. But my analogy is, from day one, if I invest my money, I want that to be generating a sort of revenue. And later, when I sell that stock, the money will have appreciated in value as well. So earning both ways at the same time. But yes, there are some good companies that may not pay you dividend at all, and there are some great companies that might pay you very little dividend. So if you like the company, you can invest in them, but just know what you have in mind for them. And for this, we are trying to create different streams of income, and one stream of income is through dividend stock investment. So when you invest in dividend stock, you don't want to sell the stock before you make that income. While your money is invested, you want to generate some dividend out of those investments. So even if the market, if the economy is in crisis, or you have economic crisis, you don't want the fear of selling your stock at a loss, or when the market is down, because you don't have to sell those stocks. While they are there, they are generating revenue for you. May not be a lot, but if you plan well your investment strategy, you have a goal in mind while you are investing, you know what you are doing. So if you target in a certain return through those investments, through those dividend income to cover some type of expenses, and you met that goal, you don't need to sell the stock to generate that revenue, because the dividend income will be providing that revenue to cover that type of expenses that you invest money for. Does that make sense? So we might come back to that later. But so if I don't know if you have cheesecake on our spreadsheet. Let's see here. I'm not seeing it. But let's just add, I think it was in the restaurant. I didn't probably add it unless it was not in that things when I was adding them. If it was not classified under this category when I was adding them. Oh, I didn't like the revenue it was paying, or more importantly the year. So but yeah, let's say that you like 1990 because we put 2000, anything before 2000. So I don't even know the symbol. I think the symbol is cake. Yeah, let me see if I can copy this one here. And then we have cake. So we don't have everything here, and we are not going back for that, but this is growth and deep, and it has all the sectors, and it's 1994 or 1992. Okay, so at this point you will complete your spreadsheet with the trend and the year. So now let's move to the next one. So we need to find our companies, and I think we are doing it backward this time, starting with the last one. So DIN. And in this scenario, we say 2000, anything before 2000. So the cheesecake one made that car. So that passed the growth and deep, and then before 2000. Therefore, it passed those two filters you can put in your spreadsheet. And in fact, let's go back, and I think it's on the low side as well. So at this point, if you like that company, you can have it in red, or you can put a note that go to buy, or buy when it's low, or things like that. You can put notes that you can refer to later, or you can just make it in red, or whatever works for you, things like that. Okay, so the DIN, growth and deep, you can see those big jump up and big jump down, and while you are there are two economical crises that we went through that we remember, 2008 and 2020 or so you can see how they perform during those two. You can see that's a company that can have a big dip down when the market is not doing well. That's something to consider. In a downturn, the company plunged down quite a bit. But you can see the price they were selling and the price they are selling now, they're still, growth to it, But there is a risk that in economic downturn, they could sell as low as how they started with in 1991. That's something to consider. And if they are paying a high return and they have been in the market for a while, met your requirement, you can highlight it on your spreadsheet that it is a growth and dip, and is something that you want to consider when you get to that point. So it met the 2000 requirement and is a growth and dip. So it's selling at a higher price now that it started with. So there is growth to it. It passed those two requirements. So you keep it on your spreadsheet. So the next one, I think there is one that we eliminate. I don't know if that was I hope that is not this. I don't know which one was selling on the OTC. Well, I don't think I have it on my spreadsheet, but let's see. If you want to go back and check, you can. Let me see that. You can just close out of this to check the market. That's what I'm thinking here. Okay, that's what I'm thinking. I want to make sure it's the one that I should have taken note of, the one we eliminated. There is BLMN. BLMN. And I need to check the market for that. NAXA, okay. And you are working from your spreadsheet, therefore, yeah, you will eliminate the one that are OTC. So this one didn't pass the 2000. It's 2023. It's young. Therefore, it didn't make the filter we set. But if 2013 is good for you, in fact, it's before the 2012, then you keep it on your you continue with it. You leave it on your things. Otherwise, it does not meet the requirement. You don't need to remove it from your spreadsheet. You can actually put on your spreadsheet that is 2013. And sometimes I don't even complete the chart. I will just put, am I completed or not? But I will put the year so that I can filter down with the year. So it's 2013, it does not make the car. So let's see here. Yeah, I just saw 2015 earlier. So yeah, for those, yeah, I'll probably yeah, you can complete those in it, but it does not mean you are going to buy them. If you have time to do that, or you can just not complete it at all, and you know that the one you didn't finish the filter for are the one you eliminated, pretty much something like that. So 2020, it failed that filter, so we are not going to consider that. The next one is ARKR. At this point, because I'm not sure what market they are selling on, I will have to get out of the chart to check the market. I know we eliminate one OTC, so I'm looking for that one so that I don't bother searching the chart for it. But again, if I think it's more trouble going back and forth for that just one OCT, you might just look through the chart. But if you know which one I'm talking about, yeah, when you have it on your spreadsheets, because we batch research, if you have OTC, or you don't even bother searching the chart for that one, for instance. Pretty much that's what I'm trying to say. So this one is 1988. That's good. 1988, and I will say that's growth and dip. Growth and dip. And let's see how much the dividend rate is. 4.9. Okay, 4.9. I'm not sure it is on my spreadsheet. But it does not matter. But 4.9 growth and dip. Okay, I think it met our requirement, right? Because we have 4, 5, 6 for growth and dip. That's why it's good to have to set your parameter so that you do not lose focus. Growth and dip 4, 5, 6, 2000. Okay, and we are here. So this one met that requirement. So you can put a note next to it, or you can just have your growth and dip. You write it down on your spreadsheet and you write the year 1988. So you write the trend and you write the year that it went public. I don't think I have that component on my spreadsheet, so I'm not going to insert it right now. So now that you are done with this medical, let's go to the next one, and the next one is WEN. And we have 1980. That's good, but you can see it's growth and dip. So that's something to take note on your spreadsheet as well. We move to the next one, and the return is 4.50 dividend. BABB. I don't know if BABB is the one that was on the BABB. OTC. So we are not going to search it. There is something I'd like to show you on that. $2001. It does have, but you can see that it's kind of downward here compared to here. So that's something to be careful of. But anyway, it didn't make the car because of the market is selling on. The next one is CBRL. CBRL. Yeah, and sometimes it will do that to let you know that it's getting tired. Okay, but you get the idea how you'll do the search, and as you are doing the search, you'll pretty much you want to prioritize the upward one, and so far we have not seen any in our search yet. So but and then you once you have the list of those companies and you have money to invest, you transfer money to your Charles Schwab account, to that account that you want to invest in, and then you invest. And to invest, you go through your spreadsheet to see the companies that you highlight or companies that you have notes, so that you don't have to go through every single one of them. As you are doing the search, you can make note or highlight things, and then you can just go back to your highlight on your note to search those companies again and compare their current price to their 52 weeks low and 52 weeks high. And the one that the prices are closer to 52 weeks low, you pull them out and then you choose the one you want to invest in. If you only want to invest in one of them and you have 3, then you can compare, because you know they are all upward trend. You can compare the dividend and choose the highest dividend, or you can look at their chart to see the growth in the chart and stream from there. And sometimes I like to have a note. So when I'm trying to invest and I have some in mind, I pull them to aside and check the price compared to 52 weeks low and high, check the dividend rates, and then I think I have the price here, but then the chart, I check the chart and then I use the chart to narrow it down. So for instance, I have growth and dip chart. For some, I have upward for some, and pretty much the one that are low. First, because I'm ready to invest, and I was ready to invest, and I'm looking at some specific one to invest in, and I pull them to here, and I compare the price to their 52 weeks low and high, and notice that they are on the low. I can buy them. Does that make sense? Some of them are halfway. So notice that I didn't bother analyzing the chart for them. Of course, I have it on my spreadsheet, but now at this stage that I'm wanting to invest, so I try to narrow it down again. So even though they have high dividend, it was not the right time to purchase them, because they are closer to high than they are to low. So, and then halfway. By halfway, I just mean the price is halfway through between the 52 weeks low and 52 weeks high. The current price is halfway through that frame, that interval. So pretty much in some way I eliminate them from this list. So, and then focus on the one that are on the low, and I say this one is the second low, then this one is low. So and then I pay attention to the dividend they are paying, and between those two, I chose this one because it's higher, and then I have this one, and then I have this one. Now I went to their chart, and I noticed that this one has growth and dip. Those two have upward, and this has growth and dip, and this one is upward as well. So to invest, if I'm going to invest in one, which one that is going to be? So this one is very low now. At that time that I was doing it, it's pretty much a month ago or so, but this has a higher dividend compared to this one, but probably by looking at the chart, I end up going with the utility, and the utility is what I wanted to invest in to start with. But then there was some oil that were there as well that I targeted. So having both on hand, I went with that, and later I went with this one. So sometimes you already have your master spreadsheet with all the information in it, but then you might find the need to pull few data out of there, have it separately, and focus on that and say, okay, I have a certain dollar amount, I have $100 to invest, and I want to invest in one of those. Which one am I going to select, and based on what? So you are going to use your criteria again and put them through to see, okay, so which one made the car, and then you invest in that. Does that make sense? That's what I try to do with those companies here, and end up buying one, and I put a note on it that I know that I purchased that one, so that if I want to purchase more later again, I can come and say, okay, the information is going to change. How much the price is going to affect how close to 52 weeks low or high they are. Then I'm going to put them through, and at the same, and then a month later I try to okay, I didn't have all the data there, but anyway, so later I pull the information from the stock, the master sheet to here, so that I can narrow some down. But pretty much what I try to do here is I went through every sector that I have on that master tab and just pull all my upward, and I have some growth and dip, and probably because I could say they are upward, they are growth and dip, but there are some growth to them. So they made a car, and I was staggering anything above 3%, I believe. But you will see that they are upward. So I was probably, my main factor here was the upward companies, the upward growth companies in each sectors that already made my card on that master tab. I pull them here, but that are paying me dividend above 4%. And this growth and dip is because probably I have upward before, and I changed it to growth and dip as I was doing this, because I didn't think it would classify as upward, but that's a good company, so I have it there. But yeah, you see there is no 3% in here, but so that I can pull those 4% up, have them, and if I'm done investing in them, then I can go back and see maybe upward 3% that are in the list, pull them out, have them separate, and invest in those, and then come for growth and dip and see growth and dip that will pay 6% up, invest in those. You see what I'm talking about? Yeah, you can pull you can pull few data out of this to focus on, and then come back again and do that. You can do that as well, but as you find more stocks, you can just keep adding them to it. But if take time to add the sector, the industry they belong to, and have them together, so that when you come to consumer stable, you know that you'll have all your consumer stable in one area. That would be a good thing. So let's go back and check. So I would say that at this point, the computer is tired, the website is tired of giving us information. And it does do that sometimes. When I'm doing it for a while, the chart tab may not work for me, and sometimes I'll just put chart not available, if it does not open. Yeah, I come across few like that. I'll say I'll just put non available, or I'll go back to a little. Yeah, chart not available. So without seeing the chart, I won't have the year that it went public. Of course, that's something you can find if you search on the other page, but I like to find it from the chart page. So that's just to show you how that research goes, and let's just continue. Yeah, we discussed that. So, okay. Yeah, well, no, we don't want you to do it for me. Okay, so we pull all our stocks through those filters, and we discuss a little bit when to buy. So you'll buy when the price, once you have your set of companies that met all your criteria, you can put a note next to them so that you can go to them easily, you can locate them easily next time you are ready to buy, and you buy them when they are on the low side. So how much to invest in dividend stock? So there is different ways you can approach this. You can set a minimum dividend income that you want to earn a year and to go about that. So I use an example of $1,000. If you want to earn $1,000 in dividend income a year, how much do you need to invest so that by the end of the year you earn $1,000? So if you have to set a rate. If you set 6%, for instance, so you have to take that dividend income you want to earn a year divided by that dividend rate. So 1,000 divided by 6% will give you 16,667. So if you invest 16,667, you'll at 6% in dividend stocks that paid 6% and plus a year, you'll make $1,000 in income, dividend income. And if you are reinvesting those dividends, it will just keep increasing. So, and when you take that 16,667, you want to find how much you need to invest a month, you just divide it by 12. So that will give you $13.88 to invest a month. So if you're investing $13.88 a month for 10 years, you can generate $1,000 a year for 10 years. So pretty much over time, you'll generate $1,000 a month because you kept the routine of investing $1,388 a month for 10 years, and those are getting reinvested. So eventually, because you are investing, you are earning $1,000 a year, and you are investing $13.88 a month to earn that, and every year you are doing the same thing. By year 2, you'll earn $2,000 because you invest in does that make sense? You'll earn twice. So by year 12, you'll earn 12 times 1,000 that year. So that means pretty much every month you'll be earning about $1,000 in return, everything equal. So it will be about that. So set monthly amount to invest based on your living expense. You can set a living expense to work with as well. So to do that, it's good to have a budget. So if you have your budget, you can go through your budget, and let's say you spend $1,000 a month, you pay off your debt, and you save $1,000 for expenses that you don't pay for every month. I like to call them irregular expenses. So that's $2,000 a month. $1,000 go in your saving, and $1,000 pay for your living expenses. So if you take that $2,000, that's $24,000 a year. So at what rate you can earn $24,000 a year if you invest in the stock market? So if you choose 6%, again, you are going to take that 24,000 divided by that 6% to find how much you need to have in your you need to have invested to earn $24,000 a year. So if you invest $400,000 at 6% dividend rate, you will be earning $24,000 a year, without even talking about appreciation of those investments, of those stocks that you invest in. Because you are not selling the stock, you cannot access those capital gain, but they are paying you dividend income to live on. Does that make sense? So if you say, okay, for living expenses only, that's 12,000 divided by 6%, that's 200,000. So with 200,000, you'll be able to make $12,000 a year if you invest in stocks that pay you 6% and plus. That's why you might want to carefully set the dividend rate you are accepting to invest in. And 3% is low, but again, you can find very good companies that pay 2% and so forth. So if you like the company, it's good to have some, but just keep in mind that if you want to create dividend, you want to create a stream of income through dividend stock investment, you might want to aim for high dividend, but not stray away from your goal to the point that you'll invest in risky stock. You want stand strong stocks that show growth in the chart and pay high dividends. So you might want to find those, invest in them before you start investing in companies that pay less than whatever dividend rate you set. So okay, let me go back. So if you set 10 years time frame to reach that goal, that's 40,000 for that $400,000, or 20,000 for that 200,000 to invest a year. So for a month, that's 3,333 if you are going with that $400,000, or 1,667 if you are going with that $200,000 to invest, that you have to invest a month. So, and we have example of budget here. It's good to have your budget to know what your monthly budgets are without debt that you can work with, and then have your irregular expenses as well that you save for. Those are expenses you pay for during the year, but now on a monthly basis. So you save for those expenses so that you don't call them emergencies. So you can either target one expense to invest in the stock market to cover that expense, or you can target the whole group of expense to save enough to generate stream of income that will cover those expenses. So, and that will be targeting the whole living expenses, targeting one category of expenses like phone. For instance, if phone costs you $16.91, or let's just say $20, you want to see how much you want to invest so that you know that your phone are paid for. Does that make sense? So set monthly amount to invest based on specific expense. So Here I'm using $50 instead of $20. So if you pay $50 a month for your cell phone bill, so that's $600 a year. So how much do you want to have invested at 6%, since we are using 6% dividend rate, so that every year you know that you are earning $600 in dividend income to cover your cell phone bills when you need it. So $10,000, that's what that will be. So 600 divided by 6% is $10,000 that you should have in stock that pays 6%. So if you set 10 years to reach that goal, then that's 10,000 divided by 10, that's 1,000 a year, divided by 12, that's $83 a month. So if you're investing $83 a month for 10 years, you'll have your cell phone bill covered. So that's pretty much what that means. So you can break down your living expense into expense category and plan on investing enough a year to generate a dividend income to cover that expense category. And then you move to the next expense you want to target. Or you can just, choose the whole set of category like living expense and go from there as well. So but it's good to set a routine, like set a goal. I like to set long-term goal so that I can break it down to small goal that I can achieve in a year, and just trying to work it into my routine so that I can do it for a long period of time and achieve that long-term goal, if that makes sense. So even if that's $50 a month you can invest, is better than not, because within 10 years, 12 years, let's say you are investing $50. Oh, we went with that 83, for instance, right? $83 a month. In 10 years, that will be $10 you invested. Every year you are earning $600 in dividend income just by saving $83 a month. So if you do that for 10 years, 12 years, that's 12 years, that is like making $600 a month. Because if you are making $600 a year, every year, I think we said 10. Let's go back and see. Okay, so if you set 10 years to reach that goal, that's that. Okay, so if we want to reach, and is 1,000 to invest a year. So if you set the goal to have this 10,000 invested the first year, then I can just turn it to 12,000. So that would mean investing 1,000 a month. But again, it might be a lot for some. So I'm going to use this 83. So if you are investing $83 a month at 6%, let me get out of this. And so that's 83.33 times 12 for a year. That will be pretty much $1,000 times 0.06. You are going to earn about $60. So $60. So $60 a year by investing $83 in a stock that pays 6% dividend. And that stock is going to continue to increase in value as well. You are not selling the stock, but when you sell, you are going to make a big chunk of money there. But in the meantime, it's paying you $60 a year in dividend income for investing $83 a month. If you are doing that for 12 years, that $60 you make a year will become $60 you make a month in dividend income, because you are making $60 a year and you keep investing that $83 a month every month For year 2, you'll be making 120, twice that $60. For year 3, you'll make 3 times that. So for year 12, you'll make 12 times that. So it's just like making $60 a month. So having that in mind, you can, you can just start with a little as much as you can, because if you think, oh, you will do it later, the thing is, you trying to set long-term goal. A decade is going to pass anyway, whether you do something within that time frame or not. So you must well set a financial goal and work a little bit towards it, so that within that decade you get something done. It could be paying off your debt, or start investing little by little as well. So it goes easier when you pay off your debt. You'll have more money left from your income that you can allocate to our investment. So that's something to consider. So how many dividend stocks do you have in your portfolio? Do you have to have in your portfolio? I think it varies. You can target 100, but then as you keep reinvesting in those stocks that you have, you can try to see the month. Like if there is a month, let me see, if there is a month that you don't earn a lot of dividend income, when you have money to reinvest in stocks you already have, you can target those that pay you within that month to see which one has a price that is selling at a price that is close to their 52 weeks low, to invest in it. Does that make sense? You can be more intentional. As you have some stocks in your portfolio, you can be more intentional, applying, setting different goals and trying to reach those. So yeah, that's that. And then how many shares to purchase for reinvested dividend? To purchase at least 1 share of stock. So that's another goal you can set as well. If you want to invest in a stock and you want each time they pay you dividend, that dividend you are going to reinvest it anyway. You want that dividend to buy another share of stocks. You will ask yourself how many shares you need to purchase for each dividend pay to buy you another share. So you'll take the price they are selling the stocks divided by the dollar amount they pay in dividend. And so if a stock is selling for $10 and pay 25 cents a quarter, so you take that $10 divided by 25, it will give you 40 shares. So you need to have 40 shares of that stock, so that each time they pay you 25 cents, it will equal $10 and it will buy you another share when you reinvest it. But again, keep in mind that the price will vary, will go up and down. So it's good when you are investing in the stock market that you start tracking dividend that you are earning. So in your stock spreadsheet, you can have you can have the list of the companies you invest in, and then you can manually enter the stocks income that they pay you, the dividend income that they pay you, or you can use a formula by pulling from a data that you can download to your spreadsheet. So how to access the data? So you'll access that when you download, when you go to history. So how to access the history? Let me go back. So when you go to your account, you log into your Charles Schwab. By default, it will be under summary. So on the top bar, you under account, you look for history and you click on history. So when you click on history, sometimes when you are under account, you'll find it on the lower top bar, you'll find it there. You click on history. It will take you to your account, you just make sure the account number is the account you want to retrieve the history from. If you have multiple accounts with Charles Schwab, and when you scroll down, you can leave it where the default is, or you can set a date range, and you will see the stocks, the companies that pay you stocks, the amount you invested, the stocks you purchased, and the stock you sold. And you can manually update your spreadsheet, or you can download an CSV file. So on the top bar of that page, you'll find export right next to print. You click on it, it'll open a window with some fine print. You click on OK, and you'll be able to find the CSV that will download for you, and you'll open it, and you can just use that. You add it to your spreadsheet, and you can just insert formula in your spreadsheet to pull data from that to your summary tab, where you can just track dividends that each company is paying. And yes, they might be little, but they add up over time. So thank you so much for watching. I'm Afiavi Liberman, creators of Liberman Consulting L.L.C YouTube channel, and ninasoap.com, our blog. We thank you very much for all your comments. Thank you for your time. We thank you all that subscribe to our channel. If you are trying to invest in the stock market, you can start with $100 or less, and little by little you'll fine tune, you'll continue to do your research to get to understand stock market more and find the valuation that works for you, that like the different type of factor that you like to use to analyze stocks. You'll find which one you like to use, because they have multiple ones. I just like to use the chart and the dividend and few others, and based on your goals, you choose dividend, you choose stocks that you want to invest in. And I will suggest you invest in the brokerage account if you are investing in dividend stocks. The reason is, if you want to access that fund, it's readily available. But again, keep in mind that dividend that you earn during the year, even when you reinvest them, you report them on your 1040 and pay tax on them. Thank you.